Hey folks, Dan Frio here, the rate update. Today is December 16th, 2021, the day after the Fed announced that they're going to pull back tapering and start raising rates and everything else. So what's going on with the markets? That's what we're going to go over next, so don't go away. Okay, so the economic news out today is post Federal Reserve coming out and saying they're going to taper and start raising rates is jobs, housing starts, housing permits. Okay, why jobs? Well, as we stated yesterday, and I state all the time, Federal Reserve has two mandates. It's full employment and keeping inflation in check. So that's what they're doing. So this is one of the things that they monitor. That's number one. Then, why are housing prices so high? Well, one of the pieces of the puzzle, and there's multiple pieces. There's not one thing where, well, rates were low, so everybody bought a house. It doesn't work that way. But there is supply, demand, this, that. So today we're going to go over some of the economic news out today is how many house permits were issued and how many houses started. So that'll give us how much inventory there's going to be. And then there's also, like I said, forbearance. A lot of people coming out of forbearance, and those houses, a good portion of those are going to be hitting the market. So the first thing I want to talk about right now is the employment numbers or the unemployment numbers. Rick Santelli, take it away. Talk about that, and then when we come back, I'm going to wrap all this together for you to make it make sense. Take it away, Rick.
Initial jobless claims, 206,000. Last week's 184,000. Post-COVID low, probably distorted through a variety of seasonal adjustments, moved from 184 to 188,000. 206,000 still low. The problem isn't jobless claims. The problem is the 4 million people we can't seem to plug into these job openings. On continuing claims, 1,845,000. Definitely a post-COVID low last week, revised subtly up to just shy of 2 million. Now let's go into housing starts for the month of November. On housing starts, 1,679,000 seasonally adjusted annualized units. Wow, that just blows away expectations by over 1 million. And if you look in the rearview mirror, that follows 1,502,000. So that is a huge jump. And on the permit side, 1,712,000 seasonally adjusted units. That follows 1,653,000. So on permits, you're up about 3.5%. You're almost up 12% on starts. Finally, our December, the most real-time data today, Philly Business Outlook moves to 15.4. That's half of the expectations. It's the lowest read of the year. And just to remind everybody, in April, this number was 50.2. That was a 48-year high. So this is definitely a big miss on Philly. Interest rates, Joe, where do we begin? So we have our curve steepening a bit. The curve in the UK is basically a lateral move. They did something unusual, of course. They raised rates. And the Bank of England, that is, Monetary Policy Committee, and on the ECB, as everybody probably knows, you talk about kicking the biggest can in history. They didn't ease back. They're doubling the rate of purchases per month to 40 billion euros. That is a big number, Joe. Back to you.
Great job as usual from Rick. So now let's dig into all the numbers. So let me get my fat head out of the way and start going over some of this stuff with you and for you. So the economic news that came in today is weekly jobless claims totaled 206,000, higher than expected and above pandemic lows. Rick just went over that information. But the other information out today is right here. Okay, so let's go down through this. The ECB rate decision, don't really care. Philly Fed Manufacturing Index, we care a little bit, but we're not going to discuss that right now. Let's go to how many people continue to file for jobless claims. And the number last month was like just shy of 2 million. The consensus was from all the economists would be at 1.936 for this period. It actually came in at 1.8, so about 100,000 less. Awesome. Okay, so that's the continued. Initial, it's up a little bit. Not much, but it's up a little bit. Okay, the just behind that is the Omicron virus, could be playing havoc. It's the holiday season. Some people might be like, you know what, I'm just sick and tired of all this. I'll go back in the job market next month or so forth. This will be probably revised and we'll have a little bit more of a thorough number there, but this is a cause of no concern. The good news is housing starts. Where'd they come in at? Well, this number's a little skewed. This is 1674. Let's take off the 9. So the previous month we were at 1.5 million. The consensus was 1.565. We actually came in at 1.674. 100,000 more, a little over 100,000 more. Awesome, like that number. Building permits. Now this is how many permits were issued to start housing a little bit down the road. Where do those numbers come in at? Well, last month was 1.653 million. The consensus was to be right around there at 1.66. It actually came in at 1.7. Okay, higher than we expected. So guys, a lot of this is coming in a good form for us. Okay, so now let's dissect that a little bit more. The forbearance piece of the puzzle. Almost all people are out of forbearance now. What is forbearance if you're not aware of what a forbearance is? So if you're a homeowner now, back about March of last year, you're able to what they call forbear your mortgage payments, meaning postpone. Okay, didn't mean skip. It means throw them away. It means postpone to another time. What is that time? Most people don't know. Your servicer can make you do one of a few things. PNC, I talked to several customers who were with PNC. They're making us pay current. If you have different information about that, let me know down below. Let me know what your servicers are doing down below. Tell me the stories behind there. Because if it's as extreme as I think it's going to be, you guys might want to look at that option of refinancing to include all that money in there that you deferred and so forth. So I'm going to do videos on that as well to help you get out of the forbearance piece of the puzzle. So you have forbearance homes. I'm expecting about 500,000 up to 750,000 homes coming on the market in the next 90 days. Why aren't they going on the market right now? Would you put your house on the market a week before Christmas? No. So people are usually February, March, they start putting all the houses on the market. So I think at that time we're going to have a lot of new homes, a lot of houses coming into the market because of forbearance, and a lot of houses, people are just like, my goodness, my house, I have so much equity and I'm going to sell it and move up. Okay, that's your prerogative. So I see the housing piece of the puzzle starting to settle down. We also see a lot of costs, lumber costs, labor costs, and so forth coming down. Okay, so that's nothing but good news. If you want to contradict me, please note down below. We can banter back and forth a little bit if you want, but I love feedback. I don't take anything personally. I'm like, what are you guys thinking? Okay, so please leave your comments down below. So how's this affecting the markets right now? Let's get my bubble head out of the way and we'll get over to the MBS market. Okay, why do we watch the MBS market? Well, let me say this. Call your mortgage advisor right now if you're in the middle of a mortgage and say, hey, what's rates gonna do? And if they say, oh, they're gonna go up, why? Well, the 10-year Treasury is up. Hang up, because they don't have a clue what they're talking about. The 10-year Treasury isn't the factor or the component at all with your mortgage rate. Okay, what is the piece of the puzzle that we monitor? The MBS market. What does it stand for? Mortgage-backed securities. It is a bond that trades on Wall Street. Its yield is the component or the biggest piece of your mortgage rate. Okay, so let me explain how this works. This right now, we are up 25 ticks. I love it, okay? Why? Well, let me explain how this works. That number right there is representative of what's happening to the price of a mortgage-backed security bond, okay? Here's how that works. The more you pay for a bond, especially in this one, the mortgage-backed security bond, the lower the yield. Let me explain this real quick for you, for those out there that are new to all this. Let's say you have a bond, and it's a $100 bond that matures next year, okay? Today, I'm gonna give you $50 for it, a low price, okay? And I'm gonna show you as the prices go down, yields go up, okay? I'm gonna pay you $50. Next year, you're gonna give me $100 back, okay? What's my yield? It doubled, 100%, okay? So when I pay you 50, I get $100 back, my yield is 100%. Let's say I give you $100 for that bond. I pay more. Next year, you give me $100 back. I give you 100, you give me $100 back. What's my yield? Nothing, 0. So see, at $50, my yield is 100. At $100, my yield is 0. So the higher the price goes, the lower the yield gets. Okay, remember that piece of the puzzle. Okay, so this is what's happening, or what has happened to the mortgage-backed security price. It's going down and down and down and down and down. What does that mean? Well, we just learned it means rates are going up. Okay, so that's the trend over the last quarter. What are we seeing for today? Well, let's go to the daily chart intraday, and it is nothing but green. Look at this, nice rally. We're going to look at possibly starting to lock people in that we didn't lock yesterday or the day before, because this rally, and just so you guys know, we didn't lock in anybody yesterday. Because the markets really, I anticipated some of this. I didn't anticipate up 25, but I anticipated a little bit of a reprieve because I think too much was baked into the cookie on this one. So when this thing starts to reverse back, we'll start locking people in on that rate. Okay, so what's the else are we going to go over? Well, you're here. What are rates at? Okay, so let's go over where rates started today, meaning where they ended yesterday. I'm going to make this real simple for you. Let's go to the top, 30-year fixed. We're going to run across these numbers, and I'm going to explain to you what they are or what they mean. Today, that means the rate today is 3.18. Yesterday, it was 3.16. What's the difference or the change? 0.02. Well, we reference that as 2 basis points. Okay, you can see that nothing really moved too much yesterday except the 5-year arm. So let's go through these. And again, guys, these are not my rates. These are the national averages. So if your rate is higher than this, there might be a reason. If your rate is lower than this, there might be a reason. Both those might be, maybe your credit scores are a little bit lower. Maybe you have a higher, what we call loan to value. Maybe your lender is just giving you a higher rate. That's why I'm going to have some information for you on how you can shop over 180 lenders with basically one click of the mouse. So stay tuned for that. So let's go back to the rates. Okay, we can go through here. 15 years, 2.54, up 2 basis points. FHA and jumbo, those are all steady. And if you're looking at VA rates, they're basically the same as FHA rates normally. But the 5-year arm skyrocketed. It went up almost 0.25% to 3.33. So guys, if you're in an arm, get the heck out of it. Okay, that's the best advice I can give you at this point. We'd like to help you in that area. So the next thing is, how do you do what I just said? How can you click a few buttons and get your loan or your scenario reviewed by over 180 lenders? Me. I just joined the largest brokerage in the country, mortgage brokerage in the country. We have over 180 lenders. What we can do, when you submit your application, we're going to scan the whole country for you to make sure you're getting the lowest rate, the lowest fee structure in the right program. Okay, the right program. That is very important. So if you're out there and you're in the process of getting a mortgage right now, please send us your loan estimate. The loan estimate is what your lender has to send you that breaks down the entire loan. It's going to give you the value of your house, the loan amount, and then where every penny of that loan is going to. What happens is most of the time people are getting charged fees that they really don't realize. And most of those fees you can avoid. Okay, so those are what we can do for you. So if you're in the process, what you need to do is email us. You're going to email it to LE for loan estimate. So LE review, singular, at therateupdate.com. Simple as that. Okay, if you're not in the process, if you're building a house, we're getting calls, probably 15 to 20 calls a day, people building houses saying, my lender, my preferred lender, the builder, won't lock me until 30 days before the house is done. Well, where are rates going to be? So please reach out to us. We can help you. We have many products that can lock you in your rate up to 6 months. But if you're looking to refinance, get out of the forbearance, like I said, cash out, put an addition on, finish the basement, pay off bills, we'd love to help you. How do you do that? Well, give us a call, 844-775-5626, or schedule a meeting with us. This is what we'll do is you'll click that, you'll give us your information, let us know what day and time you want us to reach out to you, either by phone or by Zoom, to go over any and all questions you have, because your questions are unique to you. If you're like, Dan, I don't really have any weird scenario, I just want to get this done now, or rates still haven't moved high, well, how do you do that? Just click the Apply Now button. We can get you closed probably within 2 weeks if you're tech savvy. If you're not, we got to do a lot of things by the mail and so forth. It's going to take a little bit longer, but we're getting loans done within 12 business days. So there's maybe even time this year to get it done, but that's only time can tell. So that's it for right now. When I come back later this afternoon, we're going to talk about FHA. how you can maybe get rid of your FHA loan so you can get rid of your PMI. Because I don't know if you know, but when you took out the FHA loan, if you didn't put down 10%, you have the FHA PMI insurance forever. Most people don't know that. So that's one of the things we're going to talk about, how maybe you can get out of that. Or if you're just, FHA is the fit for you, there's a way you can streamline that refinance and get a lower rate, hopefully if you qualify for that, and there's no appraisal needed and no income verification. So we're getting those done in about 10 days or less. So that's it for right now. We're going to talk about that this afternoon. So thanks for watching. Give me a thumbs up, subscribe down below, hit the bell every time I post a video. You get an alert. I'll see you in a little bit, guys. Take care.